Hello everyone and welcome to my channel. Compliance Lookup. In today's video, we will be discuss an important topics money laundering global measures. This is the chapter 3. Earlier we have learned money laundering and some methods. If you have not seen then please watch my lecture 2 in my playlist. We'll dive deeper into how these procedures are implemented, the tools used, and the real world impact they have on businesses and individuals. If you found this video helpful, don't forget to like, share, and subscribe for more content on financial compliance, regulations, and more. Now, let's begin our third chapter money laundering and global measures. International organizations have played a significant role in developing and enforcing global standards for anti money laundering to fight financial crimes. They have helped create policies, frameworks, and cooperation mechanisms to tackle the complex issue of money laundering. Some of the key organizations involved in this process are Financial Action Task Force FATF, which is an intergovernmental body that sets global standards for AML and combating terrorism financing. Established in 1989, FATF's 40 recommendations provide guidelines on how countries should create effective AML frameworks. These guidelines cover risk assessments, monitoring transactions, and international cooperation. For example, in 2019, FATF placed Pakistan on its grey list due to deficiencies in its AML measures, pushing the country to implement stronger regulations and oversight mechanisms. United Nations UN, which plays a critical role in addressing money laundering through various conventions and initiatives. Its conventions, such as the UN Convention Against Transnational Organized Crime, commonly known as the Palermo Convention, include provisions targeting money laundering as part of broader efforts to combat terrorism and organized crime. An example is the Security Council's resolution that requires member states to freeze the assets of terrorist organizations, helping cut off their financial support networks. The International Monetary Fund IMF, which assists its member countries in building their AML and counterterrorism financing CTF capabilities by offering technical support, advice, and conducting assessments. For instance, after a financial sector assessment program FSAP review, the EMF may recommend a country improve its regulations or institutions to meet international AML standards, as was the case with Ukraine in 2020, when it strengthened its banking sector's transparency and compliance due to IMF guidance. Egmont Group, which is a global network of financial intelligence units FIUs, which are responsible for gathering, analyzing, and sharing information related to financial crimes, such as money laundering. Through the group, FIUs collaborate and share intelligence that can uncover cross border financial crimes. For example, the Egmont Group has helped numerous countries fast track illicit money flows related to international drug trafficking operations. These organizations work together to develop guidelines, promote financial transparency, and enhance the global fight against money laundering, ensuring that countries are held accountable for implementing and enforcing robust AML measures. Their collective efforts have a major impact on preventing financial crimes and supporting global financial integrity. Now, coming to United Nations initiatives. The United Nations has played a key role in the global effort to combat money laundering, particularly through the adoption of significant conventions and political declarations. One of the pivotal steps in this fight was the creation of the Vienna Convention in 1988, which targeted the link between drug trafficking and financial crime. A. The Vienna Convention 1988, formerly known as the United Nations Convention Against Illicit Traffic in Narcotic Drugs and Psychotropic Substances. The Vienna Convention was a groundbreaking treaty that aimed to combat the global drug trade and the associated financial crimes, including money laundering. Key provisions of this convention related to anti money laundering AML include criminalization of money laundering for the first time in international law. Money laundering was specifically defined and criminalized when connected to drug trafficking. This was significant because it provided a legal framework for prosecuting not just drug traffickers, but also those involved in hiding or processing the proceeds of drug related crimes. For example, Colombia adopted stronger AML laws following the convention to tackle the rampant drug related money laundering activities of cartels such as the Medellin cartel. In international cooperation, the convention promotes global cooperation in investigating and prosecuting money laundering offenses. Countries that sign the Vienna Convention are required to collaborate in areas such as asset freezing, confiscation of illicit assets, and the extradition of offenders. A real world example is the cooperation between the US and Mexico, where law enforcement agencies have worked together to confiscate and freeze assets from drug cartels operating in both countries, significantly disrupting their financial operations. Seizure of proceeds of crime. One of the most impactful measures of the Vienna Convention is its provision requiring signatory states to confiscate the proceeds of drug related crimes. This strategy deprives criminal organizations of their illicit profits, making it harder for them to operate. A real world case illustrating this provision is the seizure of assets from the infamous drug lord Pablo Escobar, where Colombian and international authorities worked to confiscate billions of dollars worth of properties, businesses, and other assets acquired through drug trafficking. Overall, the Vienna Convention has laid the foundation for modern AML practices and enhanced international collaboration, making it a critical tool in the global fight against money laundering and drug related financial crimes. The United Nations Political Declaration and Action Plan Against Money Laundering, adopted in 1998, was a critical extension of the global efforts that began with the Vienna Convention in 1988. This declaration significantly expanded the international anti money laundering AML framework and highlighted the need for comprehensive, coordinated responses to combat financial crimes beyond just drug trafficking. Key aspects: expansion of AML framework. The 1998 Political Declaration broadened the scope of AML efforts, recognizing that money laundering was not limited to drug trafficking. It expanded the focus to cover proceeds from a wide range of serious crimes, including terrorism, corruption, and human trafficking. For example, after the 9/11 attacks, many countries, following the guidelines in this declaration, enacted stronger laws to monitor and prevent the laundering of funds used to finance terrorism. This was evident in the USA with the introduction of the Patriot Act, which included new AML measures specifically aimed at preventing terrorism financing. Commitment of states. The declaration reinforced the importance of international cooperation in the fight against money laundering. Governments were urged to intensify their coordination with other nations and international bodies to more effectively tackle these crimes. An example of this is the creation of multinational task forces that investigate cross border financial crimes, such as the joint efforts of European Union countries in dismantling large scale human trafficking networks that also engage in money laundering activities. Support for FATF. The declaration reaffirmed the United Nations support for the Financial Action Task Force FATF and encouraged countries to implement its recommendations to enhance their AML frameworks. Countries were encouraged to adopt FATF's 40 recommendations, which cover aspects like customer due diligence, suspicious transaction reporting, and transparency. For instance, many countries, such as Malaysia and Nigeria, strengthened their regulatory frameworks in line with FATF standards to combat money laundering associated with corruption and fraud. Overall, the 1998 political declaration significantly expanded the international focus on money laundering, driving global collaboration and the adoption of stronger, more comprehensive AML measures. Now, coming to this. The Palermo Convention, formerly known as the United Nations Convention Against Transnational Organized Crime, was adopted in 2000 to address the growing threats posed by organized crime on a global scale. This convention marked a major milestone in the fight against various forms of transnational crime, including money laundering, human trafficking, drug trafficking, and other illegal activities often associated with powerful organized crime syndicates. Key provisions: criminalization of money laundering. The Palermo Convention obliges member states to criminalize money laundering related to organized crime. Countries are required to put in place measures to prevent, detect, and punish money laundering activities stemming from transnational organized crime. For instance, in the early 2000s, Italy used this provision to strengthen its legal framework to combat the mafia's activities, leading to the arrest of key mafia members and the confiscation of large amounts of their wealth. Italian authorities were able to use the Palermo Convention's framework to disrupt the laundering of money made from drug trafficking and extortion activities, helping to weaken organized crime networks. International cooperation. This convention highlights the importance of international cooperation in investigating and prosecuting money laundering activities. It encourages states to work together by providing mutual legal assistance, sharing intelligence, freezing assets, and extraditing criminals involved in transnational crime. A real world example of this can be seen in the collaboration between the United States and Mexico in targeting drug cartels such as the Sinaloa cartel. Both nations have worked together using the provisions of the Palermo Convention to freeze the assets of cartel leaders and extradite them for prosecution, like in the case of Joaquin El Chapo Guzman, the notorious cartel leader who was eventually tried and sentenced in the US. Asset recovery. One of the most important provisions of the Palermo Convention is its emphasis on asset recovery, particularly the return of assets illicitly obtained through transnational organized crime. The convention facilitates the process of recovering and returning these assets to the country of origin. A notable example is the case of Nigeria, where billions of dollars in assets that had been illicitly obtained by the former President Sani Abacha were returned to Nigeria from European banks. Using the Palermo Convention's mechanisms, Nigeria was able to recover substantial amounts of funds that had been laundered through international financial systems, and this process continues to be used in various countries to recover stolen assets. In summary, the Palermo Convention is significant for its comprehensive approach to combating transnational organized crime. Its focus on criminalizing money laundering, fostering international cooperation, and enabling asset recovery has had real world impacts in disrupting organized crime and restoring stolen assets to their rightful owners. Now, coming to Financial Intelligence Unit. This is a specialized government agency that plays a critical role in identifying and combating money laundering and terrorist financing. FIUs are responsible for collecting and analyzing financial data from various sources, especially financial institutions, to detect suspicious activities. By working closely with law enforcement agencies, they contribute to the broader efforts to prevent financial crimes. Key functions of FIUs. Suspicious transaction reports (TS). Financial institutions are required to file suspicious transaction reports (CS) with FIUs when they observe transactions that raise red flags, such as unusually large deposits, frequent cash transactions, or sudden transfers to high-risk countries. For example, in the case of the Danske Bank money laundering scandal, FIUs received multiple STRs indicating suspicious transactions related to billions of dollars being laundered through the bank's Estonian branch. The analysis of these reports helped uncover one of the largest money laundering schemes in Europe. Data analysis. FIUs use advanced data analysis techniques to scrutinize the financial information they receive. They look for patterns, trends, and anomalies that may suggest criminal activity. For instance, in India, the Financial Intelligence Unit India (FIU) analyzes large volumes of financial data to detect cases of money laundering connected to illegal gambling, fraud, or tax evasion. By identifying unusual transaction patterns, FIU has been able to assist in high-profile investigations, such as those involving corruption or tax evasion. International cooperation. Since financial crimes often cross borders, Financial Intelligence Unit collaborate globally to share information about suspicious transactions and criminal networks. Organizations like the Egmont Group provide a platform for FIUs to exchange information and coordinate efforts. For example, after the Panama Papers leak in 2016, FIUs across the world cooperated to investigate the offshore accounts and shell companies that were used to hide assets and evade taxes. This international collaboration led to multiple investigations and asset recoveries globally. Investigation and alerts. When FIUs detect suspicious financial activities, they pass on this information to law enforcement agencies for further investigation. In Australia, the Australian Transaction Reports and Analysis Centre Austrac plays a key role in alerting law enforcement to suspicious activities. A real example is Austrac's involvement in identifying money laundering activities linked to drug trafficking through Australian casinos. Their analysis and reports led to significant investigations, helping to dismantle criminal networks operating within the country. In summary, FIUs are essential in detecting financial crimes through their analysis of suspicious transactions, cooperation with international agencies, and collaboration with law enforcement. They serve as the backbone for identifying and combating money laundering and terrorist financing worldwide. Different models of financial intelligence units (FIUs) exist globally, reflecting various ways that countries organize their efforts to combat financial crimes like money laundering and terrorist financing. Each model has its strengths, depending on how it is structured within a country's broader regulatory and enforcement framework. Models of FIUs. Administrative model. In this model, the FIU operates under a regulatory authority, often a central bank or a financial regulatory agency. Its primary function is to collect and analyze data, passing information to law enforcement when needed. An example is FinCEN Financial Crimes Enforcement Network in the United States. FinCEN receives reports from banks and other financial institutions on suspicious activities and works closely with law enforcement agencies to take action. For example, FinCEN played a key role in investigating the 1MDB scandal, where billions of dollars were laundered through Malaysian government-owned companies. Law enforcement model. In the law enforcement model, the FIU is part of a law enforcement agency, giving it direct access to investigative powers. This model allows for quicker action on criminal cases. A well-known example is the National Crime Agency (NCA) in the UK. The NCA operates FIU functions and has been instrumental in cracking down on organized crime groups involved in money laundering, such as the Russian laundromat case, where over $20 billion was funneled out of Russia through a network of banks. Judicial model. In this model, the FIU is closely tied to the judicial system, ensuring that all activities are conducted with full legal compliance. Italy's FIU is a prime example of the judicial model, where the FIU works under the judicial authorities to investigate financial crimes, ensuring that legal standards are followed throughout the process. This system ensures greater transparency and adherence to the legal framework. Hybrid model. The hybrid model combines elements of the administrative, law enforcement, and judicial models, providing flexibility in combating financial crimes. Australia's AUSTRAC is an example of the hybrid model. AUSTRAC collects financial data and also has enforcement capabilities, working with various agencies to ensure compliance with anti-money laundering (AML) regulations. A real-world example of AUSTRAC's work was its investigation into Crown Casino, where systemic money laundering activities were discovered, leading to significant regulatory actions. Real-life example of FIU in India. In India, the Financial Intelligence Unit India FIU has played a crucial role in identifying and disrupting financial crimes. One notable case involved the detection of a Hawala network, an informal system of money transfers that bypass official banking channels and is often used for money laundering. By analyzing suspicious transaction reports, TI's FIUs was able to identify large-scale illegal hawala operations. These findings led to the freezing of assets and the arrest of individuals involved in this illegal network. FIU's actions helped dismantle this network and highlighted the importance of FIUs in ensuring financial security. Importance of FIUs. Financial security FIUs protect financial systems from illegal activities like money laundering and terrorist financing. By monitoring suspicious activities, they help safeguard the integrity of the financial sector. International cooperation FIUs facilitate global collaboration by sharing data on financial crimes with other countries. This international network of cooperation is vital in tackling cross-border money laundering, as seen in the Panama Papers case, where FIUs worldwide collaborated to investigate offshore accounts. Monitoring and regulation FIUs ensure that financial institutions follow anti-money laundering AML regulations, helping to prevent criminal networks from exploiting financial loopholes. Transparency. By cracking down on illegal financial activities, FIUs promote transparency in the global financial system. For example, the work of FIU in uncovering the Hawala network helped bring transparency to a system that had long operated in the shadows. In summary, FIUs are indispensable in the fight against financial crimes, offering diverse models tailored to the specific needs of countries, and their work is crucial for both national and global financial security. So, we completed this chapter 3 of Money Laundering Global Measures. Our next video is on international guidelines and its standards. Thanks for watching this video.